What is going on, everybody? Welcome to the channel. Welcome to our Stock Summer Sunday. This is our weekly stock analysis over the coming week. We do talk about long-term investing, and also we talk about trading intraday, intra-week, and getting you ready. This is beginner friendly, so if you're here new, a reference from another maybe Leverage University member, which is our Discord platform where I live trade and also share trade ideas and educate inside of a closed-knit group. But if you're here for the first time, welcome. If you watch the other videos and you finally tune into a live, I appreciate you. If you're rewatching this, right, welcome again for those that are catching up later after. So if you want to plug this into your calendar every Sunday at 7 p.m. Eastern Standard Time, that'd be awesome to come and support for a little bit. We talk for about 90 minutes or so. The reason why it's so extensive is because we talk about the entirety of the week instead of just a quick intra-week update. So for those of you that have questions, it's great to jump on live because you get to go ahead and ask, hey, can you chart out this particular stock for me? Can you let me know what this looks like maybe for 2026, or give me maybe your take on it? Disclaimer, not financial advice here. I just want to make that clear, but I have trading experience since 2018, buying stocks longer than that, obviously. But I'm here to support, to help, to educate, and to give people a clear understanding and kind of debunk some myths around trading in the stock market. And I think, as I've been telling my community, if you can understand this market, a Trump market, his second term, but first year of the second term. That's what I was trying to say. First year of the second term, then you can trade any other market, in my opinion. All right. Because you've got volatility up, down. Are we going up? Are we going down? It's based off of what this man is saying day in and day out. And that can be tough. Right. So I want to get people confident, right, around what they maybe can do, can't do, what they should do or consider. Right. So thank y'all so much. Medlord, what's going on? What's going on? What's going on? Let me know who that is. If you're familiar, with who I am, we've met before, and you have a different YouTube name and you don't want to be known, that's cool too. But if we've met before, I'm calling you by your YouTube name, you're like, Brian, it's me, right? And you want to let me know who that is. I'd love to shout you out. All right. So thank you also for the support, and we'll get started here in the next 3 minutes. 3 minutes at the top of the hour at 7:10. All right, 7:10. I know it's Sunday. Y'all are probably cooking up, cleaning up, getting ready for the week, and also watching some maybe football or your favorite show. So, yeah, had a great week. It was a little tough. I'll just say that it's a little tough as far as a trading week this past week, simply because, we were down before, right? The dip was bought back up, and then we were going back and forth and back and forth, and we were kind of in this range, which typically happens before big earnings reports, which we have this week. So I really want people to learn in this sequence, because this will happen again. All right. Still caught. What's going on? What's going on? For those that don't know, and maybe you're rewatching, that is or those that doubt it, I guess. Yes, the doctorate is real. So that's why people call me Dr. B. If it's another pharmacist that I'm talking to, what's going on? So yeah, still caught. St. Louis College of Pharmacy. That is where I finished pharmacy school. So yeah, that is a whole story. If you want to know my backstory or how I got to this point, you're more than welcome to ask. But yeah, I have never left that skill set. I think the skill set of education and teaching and learning, it's very similar, I would say, stocks, to us learning medications. Right. So in pharmacy school, people may ask, like, how does the pharmacist know all these medications, or these doctors know all these medications behind the counter? And that just seems overwhelming. Right. Anyone that knows a pharmacist knows. So I treat the stock market very, very similar, right, to understanding, quote unquote, the drug class, right? Understanding that we've got different classes. And that's how I've essentially tackled the markets. There's the tech sector, there's consumer discretionary, there's healthcare, right? There's home development, and there's real estate, right? So they're all in different sectors in the markets, and then you divide the companies in each sector, right? So if you're trading a sector, then you can choose, right? Semiconductors are chips. So you can choose which companies you like out of those sectors, or essentially choose the whole class, right? If you like that class or that sector for the future. And I think that's a great way for beginners or anyone that I'm teaching to understand that this is so much. Like, which stock do I choose? Which one do I trade? Like, how do I do? There's so much, right? You simplify it into groups, right? And those groups become a little bit more manageable, essentially. All right. So we got about 30 seconds here and we'll get to it. So for those that don't know the sequence of this, I want to explain really quickly how we go over this. I talk about the fundamental analysis, which is the news, the things that might affect the movement of the stock market this week, which is our data. We have a lot of data reports. As you know, the government is still shut down, right? And it's starting to pick up, right? People are actually starting to not show up for work. A lot of folks are not getting paychecks, right? So now the things are starting to happen from this government shutdown, and it's still a concern, right? We are still not back open. So these data reports that helps the Federal Reserve make a decision around rate cuts have been slightly delayed. That's why we had CPI on Friday, but we have not had a jobs report, right? So the jobs report should come out this week or next week or whenever they decide. But this week we do have an interest rate decision. So we have FOMC, and I tell anyone I'm teaching, my clients 101, anyone, if you don't know anything about the stock market, know when Federal Reserve Chairman Jerome Powell, or who that is, what he's doing, when he's speaking, and know FOMC. F is in Frank, O is in Oscar, M is in Mary, right? C as in cat. So FOMC is the interest rate decision day. That is when they decide how much they're going to cut, if they're going to pause, if they're going to hike, right? And that day when they speak, which is always at 2 p.m. Eastern Standard Time, people need to know that day, right? They need to know that day, and it happens multiple times during the year. So investors, traders, what we'll do is we'll put that date on our calendar, because leading up to that date, the market might move a certain direction. And if someone's not familiar with that, that's okay. But don't ask the question, or don't be surprised when something big happens that week. So if we have a big movement up higher, you're like, man, the stock market's going crazy. Yeah, because they cut rates. Or he could cut rates and it's already priced in because everyone expected it to, and it could drop the market. Why is the market dropping? I thought rate cuts were good, right? And that's why we do, as we call, technical analysis, which will come second, which is the charts. So we got fundamentals, news, data reports, earnings, put those in the category. And then we got technical analysis, which are the charts. All right. So if you've never been on my live, right, and you are a person that really wants to learn and understand, because I know, there's many lives you can be on, right? And you may listen to multiple, right? And there's those that are just straightforward. Hey, let's jump in the charts. Let's do this. And you're like, I'm lost already, right? On my lives, I want to make sure that people are also learning what I'm talking about and what it means. So you can be like, oh, I'm following. Okay, that's why he's talking about that, right? That's why that matters, right? So when people say earnings, they're like, why does that even matter? Like, it's an earnings report, because we've got essentially 7 to 10 companies or a certain sector that's moving the market alone. So it's very, very important, right, that these tech earnings come in strong, or that their guidance come in strong, and that everything is good underneath the sun, right? Because if it's not, then it can move the market tremendously. All right. Well, gas was down all week, but just the weekend or Sunday, gas is up 20 to 30 cents. Something happened sideways. Oh my gosh. Yeah. What's going on? Sadie says, how are you? Welcome. I appreciate you for supporting and being here and giving up your time. Any other questions you have, please ask, right? So if there's a confusion, or, hey, Brian, can you touch this? Or I always wondered this about the stock market, please ask, right? So I'll definitely cover those things that y'all put in the chat. So without further ado, I am well past my 3 minutes of staying at the top of the hour. So let's jump right into it. Let's get going. Please hit that like and subscribe button. We are moving and grooving almost to that 2,000 mark. And as we gain more subscribers and supporters on this channel, I'm pretty sure that the buzz will start moving, and we'll start, the YouTube streets will start pushing these videos out. All right. So let's jump into it. And thank y'all so much for being here. So the first thing we want to talk about, the news that's happening literally right now. Okay. This weekend, right? We know that, like I said, we've had Trump trying to decide whether he is essentially going to make a deal with China, or he's going to tariff, or he's not going to tariff. We can't be concerned about that, or you can't be fearful about that. In the stock market, you never want to assume what's going to happen. So as I talk about on the lives, and also in general, you have an investor mentality that's long-term. Right. So if you're a long-term investor and you're here and you're wondering about your shares and what's going to happen, just know if you have a 5 to 10 year plan, then hold. It dips, buy more. It's very simple, right? buy a dip of a 3 to 5% pullback, buy a dip of a 10% correction, and buy a dip when we're on a bear market 20% pullback. Very simple. April was a 20+% pullback, buy, right? These past couple of weeks, we've been having 2 to 3% pullbacks. On Friday of last week, the 16th, that was about a 2% to 3% pullback, buy, right? Whatever your favorite companies are, just buy a little bit. So the long-term investor mentality is not that difficult. It's the intra-week, intra-day, like people are concerned when they look at the news and like, it's red this week, and then they look up and it's green, and then it's red and it's green. They're like, what do I do? Do I need to take some profits? Do I need to sell? What do I need to do? Right? So just know that on this channel, or just in general, if you're a long-term investor and you got retirement, things of that nature, obviously disclaimer, not financial advice, but 5 to 10 years, right? Hold, keep buying more dips. Now, I will always say that we do have, I have been looking at the statistics and the analytics. I don't know if it's my demeanor or how I carry myself, but we do have some folks that are, headed towards maybe potentially that retirement age, right? We've got some people that are like, hey, like, I don't have much longer here. I don't know when my time is coming. So like, I don't know if I can take another big correctional time. I don't know. That's a different type of story, right? That might be a consideration of, hey, I might want to take some off the top, right? Maybe I'm up 100+% on my portfolio. Maybe it's okay if I take 10 to 20 or 25% off, right? And put into cash just in case it does drop, right? So please don't be a bag holder. You can rinse and repeat, but never, in my opinion, sell your full position of whatever you're holding, right? Long term. Okay. Just want to get that out the way. So these tariffs, Trump going back and forth, that should not concern a long-term investor, right? Only that you're like, I don't want to lose the profits that I have up, right? So never get that twisted, because sometimes the trading mind can get in the way of the long-term investor mind, right? It's been a great year, right? Even if you didn't do anything, even if you didn't buy the April dip, you're looking up and like, man, I got some stocks, I'm up, right? I'm up. So it's been a great year, great couple of years, right? Great last since 2022, right? Really 2020 on that dip, right? You've been just riding the wave and just holding. It's like, oh, okay, a little blip, I'm up, right? So now I will throw in kind of a devil's advocate later. So make sure you stick around for that as to far as my kind of long-term correctional pullback or a weekly pullback that we may have. So you know what that looks like. All right. So tariffs, this is intra-week, intraday. So if now we're talking about the trader, what might happen in the next couple of weeks and into the end of the year. All right. Trump raising tariffs on Canada, another 10%. Putin still in talks with Putin about what they're doing there on the peace deal. So essentially, just got to pay attention to what Trump's going to do. And I want to keep people in mind that this could be a buy the rumor, sell the news event, right? So that means that as this good news is coming out, we can pump higher, pump higher, pump higher. So guess what? What can always happen is that big money, or as we call it, the suits, right? Hedge funds, they are going to want to capitalize on their profits for those capital gains tax benefits towards the end of the year. If you remember, put a 1 down below if you remember December of last year, right? We were bullish after the election into December, and we had that big correctional pullback into the end of the year. So imagine yourself being up tremendously on AMD, NVIDIA, all these tech stocks, right? Amazon going crazy. Google went crazy finally, right? Ever since the April dip. And then guess what? Hedge funds or whoever might want to capitalize on those gains to move it into real estate, tax benefits, so they can end the year off and then go into a fresh year, right? So all I'm saying is that we have more upside, right? But don't get too on your high horse that you're not focused on the pullback yet again. And I'm just talking about pullback. That means a 3 to 5%, maybe red week again. And then we move higher, and then we move higher, and then we can have another pullback week and then move higher, right? So always be watching, and I'll show you on the charts those pullback weeks. All right. So for those of you that are new, or those of you like, this dude dang on talks at the beginning of this, I want to set a foundation. then I move quicker through the chart. So you're not lost on the charts. So I set a foundation of my sentiment and then we go into the charts. We good? Cool. So I'm keeping on consideration that Trump will be talking a lot this week. So I want to back off, right? Sit on my hands and kind of just see what's going to play out, because whatever he says, the market's going to go up or down, right? So it's good right now. He could change his mind, and then he could change his mind again, and then he could change his mind again. Y'all know how that man works. Okay. So it's a good thing because there's volatility, but also it's the unknown, right? All right, so we got that going on. Let's jump into the earnings this week, and then we'll jump into the data. So earnings. So that was point number one on the fundamentals, is what Trump is saying in that peace deal. And we had good news right now that he's trying to make it and that he's backing off the tariffs. So that's good news. Good thing. Earnings, packed week. So for those of you that have never seen an earnings, here's how an earnings week, month, season looks like. All right. We kind of had a little, nice little entry last week to IBM, Tesla, and a couple others. This week is the heavy hitter week. Heavy hitter week. So how I like to typically play these weeks or look at them is I like to sit on my hands. I'll sometimes even take Monday off. Or if I see like a gap or a solid A+ setup, I might, get some green to start off the week, take a nice little trade and get up out of there, enjoy my Monday and just watch, right? So Monday, we will be up in the morning most likely because the futures market is up. So that means we're going to be gapping up in the morning unless it comes back down overnight. Okay. So we will be up most likely on Monday. Everyone will be on their high horse. Good news, positive news. Cool. Right. On Tuesday, we start having some interest, right? A lot of folks heavily invested into SoFi. If you're not, I'd start getting interested. Okay. Heavily invested into SoFi. It's $28, $29, still sitting underneath $30. Still think it's a great buy underneath 30, right? A lot of us, we have shares underneath 10. If you got it underneath 15, even if you got it underneath 20, you're sitting pretty, okay? My buy zones on SoFi right now, if we do have a pullback or a correction, is that $17 to $18 buy sitting around 20, or break above 30, right? And holding above 30, we're gone. We'll probably head to 50, then most likely 100. And I'm talking about the next 2-3 years. 2026 could be SoFi's year. All right. So everyone's been accumulating SoFi really for probably the last 5 years, but over the last really year to year and a half, SoFi's been picking up steam. All right. So SoFi, right? That is one that you might want to consider. Do I have my shares ready? Am I interested? Can I get positioned? SoFi. All right. Trading wise, if you haven't watched my how to trade during earnings, I typically always like to wait till after they report. So on Tuesday morning, I might be interested in either trading SoFi, right? We got UNH. Everybody's going to have their eyes on UNH. Is this the time that UNH goes to $400+ and we're going back to the upside after this big dip from the last kind of correction, bear market pullback, all the stuff they got going on, plus their CEO, the killing, the last earnings report, right? All that. So UNH, a lot of folks are positioned via shares. Still trading wise, this could give you another opportunity on UNH. Is a big mover. All right. Big mover typically might move $20, $30, $40, $50 plus on earnings. All right. So be careful on that, but also mover if you got a bigger account or you're paying attention to UNH. PayPal, also a decent mover there, right? PayPal has been sitting right around that $65 to $70 range. A lot of investors are looking for PayPal to recover at some point. So I do think PayPal is another good position for shares. Okay. As far as long dated option calls, leaps, I do think those are also great at this level. All right. Now, other investors might say PayPal is the age old boomer type of thing. We've got other stuff going on. We got Apple stepping up. A lot of these tech companies going to take over the payment space, but PayPal still has a lot of cash on hand, right? So PayPal is more of those, is a company that is quote unquote recession proof. right? It can withstand because of the amount of cash that it has on hand. So it's very similar to Intel, right? Like Intel, we got all the new chip companies coming on the scene, so on and so forth. But Intel is kind of like that age old, like needs to pick up some steam, needs to get back in the groove of things. It's kind of like PayPal, all right? So that's kind of my analogy there, metaphor, is that PayPal's still of interest. So if you've got positioned, PayPal is a 3, 5, 10-year plus play, in my opinion, where PayPal can have that recovery if you're positioned for shares around 50, 65, and then underneath $70. So that $15 range, I do think it's a great buy personally for PayPal shares. Trading it intraday, intra-week can be good. I think it's better for long dated call options. Or if you got 100 shares of PayPal, maybe you're doing covered calls, cash secured puts, things of that nature on the sell side. All right. UPS, great dividend stock. Okay. So another kind of staple there. I know folks are concerned about UPS and the strikes and, you know, their unions and things like that. But as far as another solid, don't overthink it type of company underneath $100, UPS sitting at $80 to $85 is still a great share buy. So again, to my long-term investors, the folks that just don't want a lot of risk or like, what do I buy? It's not the sexy AI. It's not the sexy quantum computing, stuff like that. But these are companies that you can hold for kids. These are companies that are going to be here regardless, right? That will recover over time. All right. So UPS, another great dividend stock buy. Okay. So I'll show you on the charts, but these companies are kind of like those staples, right? It's not the sexy back and forth, but it's like those staples that are on discount that you kind of want to be positioned in for shares, because 2026 could be that year for those companies. It's a down year. All the AI companies, all the quantum computing, all the tech have been booming, right? But these companies are those stable that you want to kind of have in your portfolio. All right. In phase, interesting. Visa, always a staple. And then, okay, so we start off here on Tuesday. Verizon on discount, one of the best dividend stocks. Okay. So when investors are like, hey, what can I get a return on for just holding your shares? Verizon is always a staple in people's portfolio. So if you're an AT&T person and you got an AT&T phone or you got Boost Mobile or something else, you're like, I don't like Verizon. Don't think of Verizon as as your phone provider. Okay. Verizon is on discount, right, for those dividend shares to hold long term. All right. Verizon, keep on watch there. Boeing's always interesting. CVS, I think the dip has come. It was at $40. CVS still a great buy, but CVS, Caterpillar, always a decent mover. I don't trade it regularly. I have traded it, but Caterpillar, Centene. Okay, I've been telling my community, Centene is a no-brainer in my opinion. Buy at 30 to $35. Okay. Like if someone's like, I've never invested in the stock market, buy a healthcare company, a health insurance company, they're a $1 trillion industry. It's not going anywhere, right? UNH, Centene, you can buy there and in my opinion, double up in the next 3 to 5 years, right? So dollar cost averaging into Centene for shares is great. Also, it's in a long-term leap opportunity. Okay, so I do have a lot of my Leverage University members that are in long-term leaps for Centene. That means January 2027 contracts, right? We're looking for a target of $50 on Centene, $50 minimally. All right, I don't like to get too far ahead. Minimally $50. That means it's sitting at 32 to 35. That means just to get to 60, you'll double up your money in shares, right? So most people are looking for what? 3 to 5% in their savings account. And we're talking about 100% plus, right? So 50 to 60 will give you that 60 to 100% on your money, just shareholding. Okay. So just want to get this out of the way for shares first. Then we'll talk about trading opportunities once we get on the charts. All right. And then we got our heavy hitters. Okay. Heavy hitters. Now I want you to pay attention to this Wednesday date here, because this is when the FOMC meeting is. So Wednesday can be an awesome trading day, but it also can be a very volatile, very back and forth, sporadic day, which can make you money, but it also can confuse people if they don't know. So I do not want you mark your date, right, on the 25th. Okay. Mark October 25th, watch the market. October 25th, watch. See what happens. If you've never seen the volatility back and forth, you will see it at 2 p.m. Eastern Standard Time. Okay, that is when Fed Jerome Powell is making a decision, right? So he could drop the market, and then after hours, we got Meta, Microsoft, Google reporting. If they have really good earnings, we'll go right back to the upside, new all-time highs. If they have concerns, and kind of like what Netflix did, right? Netflix kind of had a slight miss, and most people are like, how does Netflix miss? Like I pay them $14 a month, right? It can drop, right? So even the best of companies can pull back. So that's why traders, investors will tell people to kind of sit back and wait until after the earnings reports. Be positioning your shares, but trading wise for options contracts, things like that, sit it and wait and trade till after the earnings reports. All right. Cool. Everybody good? Just check and make sure we're still good. Don't switch. Okay, cool. Chipotle, another one. Positioned shares. In my opinion, easy money shares. Positioned. Make sure you're positioned inside of Chipotle. Easy money, in my opinion. All right. Cool. Carvana, also interesting. Let me move around really quickly. Lilly, also a big mover. Going to be watching that. Merck, healthcare on discount. Why does it keep doing that? Amazon, Coin, Apple, all here. So anything big tech, I'll be trading it or looking at it the following day. Right. So Meta, Microsoft, Google will be trading it or looking at it the following day. Thursday morning will be a great trading morning. Thursday morning is the big morning for trading. Right. That means you have all the FOMC news out of the way. That means you have some of the big tech earnings out of the way, and you can trade a little bit more fluidly. So a lot of traders will just wait, maybe take some trades, some light trades, Monday, Tuesday, maybe Wednesday, just to get some cushion. And then the big trading day will be Thursday morning, right? Thursday morning. All right. We good? No, I do not want to switch. Stop telling me that. Give me a 5 in the chat. I know that was long. I understand it's a lot to take in, but if you see something on the charts, maybe do some research on the company, and then we'll trade it or look at it when it comes up. All right. Cool. Let's jump on the charts where the money's made. Let's see what's going on here. All right. Let us see what is going on here. Monthly, I'm going to take up all these lines as I always do on our stock sermon Sunday, just to make sure everyone has a fresh look. You have a better idea what's going on. 5 is in the chat. Everyone good? Everyone got their charts up? If you don't have your charts up, that is cool. Fresh view. Yeah, I know David's position. Let's go. CNC looking good. Even if it pulls back, add another, right? Add a little bit more shares. But if it pops, I'm just gonna say, told folks. So I'm ready for either way. All right. So let's jump on the weekly chart. I said let's look at the monthly because the monthly is about to slowly end. Right, we got 4 more days, roughly 31st. What is that? 5 days left in the month. Okay. And we can see that the monthly chart has made a new higher low and a new higher high. So we've had 1, 2, 3, 4, 5, 6 green months, right? Ever since that April dip, we have not had a red month. We've had some red weeks, but no red months, no pullbacks. If you can look here on a monthly chart, The red month is inevitable, right? The red month is inevitable whenever you have that pullback. So what I wanted to introduce people to when I started off talking at the beginning of this live is to make sure people understand that yes, we are bullish. When do you buy? When do you load up, Brian? Like I'm positioned, I'm doing everything right. I'm green long term with my shares and my leaps, and I'm trading the upside, and it just keeps going higher and higher and higher. I don't know when to buy. Like everyone keeps saying like it's bullish, but I'm also a little bit concerned of when we will get a pullback, like a real pullback like we had here, right? So what you want to do is you want to look at the red weeks as opportunities, but you also want to consider, do we start a new month off potentially red, right? So into like March right here, okay? We had somewhat of a red week plus a red month, and it started to just never recover that month. That is a month that you want to start consider buying, right? You always want to be dollar cost averaging, turn on recurring buy, or your broker does it, or your financial advisor, or you do it, or your company does it. If you have a corporate 9-to-5 job, that's fine. But the big question a lot of times is, when do people buy? Right? I've got a client right now. Shout out if you're here. I won't mention his name or anything like that, but I've got a one-on-one client that I'm working with. He is 20 years old. Okay, 20 years old, has made good money from his summer job that he had, and I'm so excited for him because he's like, I'm starting fresh. I want to prepare myself for the future. I've got some cash that I made from the summer, right? Over 5 figures, right? So he's got that amount of money, cash, and he's like, okay, I want to put it into the market because I don't necessarily need it, but when do I buy? Right? And I said, this is a perfect opportunity for you to start because we're at all-time highs and you can watch this move and move and move higher, right? And potentially you could be buying towards the end of this year, or we could sit that there and find some buying opportunities. But also I'm showing him on the charts, and for those of you that are listening right now live and on the recording, when your buy opportunities are. You want red months or red weeks. That's when you want to go in long term, right? Always DCA, but that's when you really want to go in long term, is on red months and red weeks. Okay. So you see these, I'm on a monthly chart, red month. When was that? January 2022. So it's inevitable, right? There was another red month, April 2022, another red month, June 2022. So this was a whole bear market. Then you had some red months here. Okay. Red month there in April, which was normal. What happened last year around this time? Let's look at that. So we went higher into November. As you can see, we had a little bit of a red blip right here in October, which is where we are now, right? So the month was green and then it flipped red very quickly. You see that? So for those of you that are not familiar with candlesticks, this was once a big green candle, right? It was once a big green candle for the month. We opened up right here at 566, went higher into 577, and then the month essentially just sold off and finished red like that, right? So we're kind of doing roughly the same thing. We're pushing higher. We had a little blip, right? Last week, Friday, October 16th, normal pullback. That's fine. Based on Trump tariffs, we're pushing higher into the end of the month, but the month hasn't finished, right? So this is what happened last October, is we pushed higher and then we sold off the month and finished the red month. That's buying opportunity to go into November for green. It's kind of a little bit what I'm seeing right now, which is going to be interesting to start off November. So everyone is essentially thinking green, 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 green into the end of the month, but there still hasn't been that weekly pullback, right? So that's what I want to prepare people for, is continue higher for your trading. That's fine. But Brian, like, when are we going to have like another one of those like last Friday moves where it pulls back and we have like a red week or a red day? Most likely. that's another buy opportunity to have a November potentially like this. Does that make sense? Make sense for everybody? 5 in the chats. 5 in the chats. 5 is one of those confirmation numbers. Go ahead. Fives in the chats for me here, that you're understanding this. So November is typically a very bullish month, right? Very bullish month for the market. And then look at December of last year. So we could have a very bullish bullish November, and then December could open up and give us another buy opportunity for that red month that we're looking for. Remember when I just mentioned earlier that could be potentially the month, as everyone says, man, I've had a great year, great push for the final push of November. Let me take those tax, capital gains so I can move it into tax benefits, or finish off the year and say, okay, great 2025. I had a great year. Let me take my profits. Right? So look at last year of how we, ended off the year, got those pullbacks, and then we ran for the rest of the year. Right? So after 1, 2, 3, 4, 5, 6. Let me see if there was another run like this. Here, 1, 2, 3, 4, 5, 6. All right. So 5 or 6 bullish straight months. And then obviously we had November, but we started to get some profit taking just a little bit on the month. All right. Or was another one after this bear market kind of year here, 2022. 1, 2, 3, 4, 5, 6. All right. So just sharing that for that reason. Okay. Now, again, I'm going to mention it because we have some new people every single time. And then I'll go into my intra week. Like, Brian, what's going to happen tomorrow? What's going to happen potentially Tuesday, Wednesday, right? Maybe into tech earnings. Is it going to be bullish into tech earnings? Most likely. Most likely. We're going to be bullish. We're going to keep buying the dips. It's going to go higher. Keep buying the dips going higher. But again, if you're trading intra week, that's a different story. Long-term investing, very easy. Okay. So here is my projection for what it would look like for a great buy opportunity, like another great tech dip buy opportunity. So just say we have another green candle that pushes like that into 700 for November, right? Into 700 for November, right? We go into 700 for the SPY. Okay. Then we will maybe start to have potentially a little bit of red come in like that. All right. And then maybe December comes in and starts looking like that. All right. And then potentially we'll have a weekly or a monthly pullback that'll start looking like this into potentially 2026. Very similar to like this. Right. That will be what it looks like for that monthly pullback. And this might be green potentially like that. And it will look something again like this for a monthly, right? Very similar to that April pullback. This is where you want to consider your next buy opportunity on the overall market. Is that weekly or monthly pullback for your next kind of load up to ride it higher, right? And then that's when you can just say, cool, I'm along for the ride. Maybe 2026, maybe 2027. We don't know. But this area around here, which will be around 620 to 600. 620 to 600. Now, this scares someone intra week, right? But I'm talking about a long-term outlook. It happens naturally. Look, there's 2020, boom. 2022 bear market, boom. Pullback, cup, handle formation, pullback, tariffs. We'll have something else. And that's where your next kind of, okay, this is what he was talking about. Let me go into my brokerage. Let me start buying some things. What's on discount? Okay, what's my favorite tech companies again on discount? Okay, NVIDIA pullback. Let me buy a little bit more of that. Okay, Apple pullback. Okay, let me buy a little bit more of that to take it higher. 5s in the chat. We good? So this is a visual of what the end of the year 2026 will kind of look like for that opportunity to go higher, right? That is what the market stair steps up and looks like. So yes, we're right here. We are right here. So we could go to 700 plus. We don't know where the highs is. It could break new all-time highs. It could pull back now. We don't know. But right now, there's nothing that you want to consider of this until it forms. All right? Because investors are looking for when's the next weekly pullback? When's the next red month? I want the next red month. All right? Give me a red month. All right? That is what that would somewhat look like. Cool? Fives in the chat. We good? So that's for my long term. That's for my long term, folks, of what it would look like. So you don't get scared or thrown off of when that next opportunity looks like. Yep. Awesome. Cool. Now let's talk about this week. All right. And we're slowly approaching the top of the hour. So make sure you hit that like button, subscribe button. And I want to make sure I'm aware of time as well. Okay. So there is no indication of selling. Do we have any top wicks on this candle? No. Do we have any top wicks on this previous monthly candle? No. Do we have any top wicks really on this candle? No. A little bit here. Yeah. A little bit there. Cool. But really no heavy top wicks that look like this. All right. That's what we'll start to, as we push higher, sell off. That's what it would look like. Top wicks on a monthly candle. No indication of that. Okay. So that's why every dip is getting bought to go higher, dip getting bought to go higher. You want to wait till you get a top wick or a red month or a couple of red weeks in succession. All right. All right, cool. Let's see here. Let's go on a weekly time frame. And pretty much the same outlook, just gives us a little bit more information there. Still higher, higher lows, still going in this channel. So that's what I've been marking off in this channel, is that it's still holding channel structure, higher low. But guess what we're doing? We're approaching the top of the channel. Look what happened last time we approached the top of the channel. So can we get another push higher, right, into FOMC? And as everyone gets all horned up, right, for new highs and new highs and new highs, we have a pullback of a potentially red week that comes in. It's like, dang, just can't ever catch it, right? I thought earnings were good, man. Why did Apple earnings pop? Why did Meta earnings pop and then sold off? Is because everyone's like, I rode it all the way up into earnings. It's time to take my profits. Does that make sense? Psychologically, if you ride it all the way through Q1 earnings, Q2 earnings, and Q3 earnings, and you've rode big tech all the way into the end of the year, it's like, it's about that time. Great earnings, cool. Everything worked out for 2025, and you get another weekly pullback like that, right? And then maybe push into November and we go higher like that. You see how it look on a weekly? And then these are a lot of times where I always make sure when I go into a week, and it doesn't always work perfectly. Like last week, I had a red week, right? I took a couple of trades. I'm like, it's going back and forth and back and forth. And I was just on the wrong side of the trade. Right? The previous week, great read. I had a big week, right? For trading. So I've got to know going into this week how there could be traps set, but we're still bullish, right? And that's the volatility of a Trump market. It's like we're bullish, but then you have a big red pullback week like that, like this, and then it just goes higher the next week and we continue to push new all-time highs, right? But the moment we start breaking underneath the channel is then that's when we get concerned. But that's not happened. Right? Does the visual help everybody? Does the visual help? And then I'll get into the levels. Okay. So the weekly levels that we have right now is we have 670 as a big weekly support. Okay. 670. And then we have 673 is the previous all-time high. So as long as we're above on the SPY, 673, and then if you want to put 674 is great. Okay, 673, 674. Okay, as long as we are above there, it could, like the market could drop tomorrow and you're like, oh my gosh, why is the market dropping? It looks drastic because we're at 670, almost 678. And then SPY could pull back another $5, but we're still above 673. Make sense? And I'll show you a good setup of why that most likely will happen Monday or Tuesday. That we'll have a pullback or a red day because we have a gap. right? So I'll show you what that looks like on the daily chart. 673, right? That is our mark, 673, 673, 673. It could even pull back potentially to that 671 or 670 and kind of trap and get underneath there, okay? So I want to mark out this complete zone here as green. So if you're following along with the charts and you're marking out, that is the zone that is still bullish, okay? So we could keep grinding higher potentially overnight and go into 678, excuse me, 680, I'm sorry, 680, 680, and potentially go up into 685 plus. It just could keep grinding higher, right? Anytime there's a new all-time high break, it kind of just, it's nasty looking in my opinion. It just keeps grinding and going higher and going higher. That's great for long-term. It's not that great for trading purposes, because that's when traps are set. And I've taught my community that that's when traps are set, when we're grinding lower and then we pop higher, or we're grinding higher in a bull market and then people chase and then we drastically had that elevator down. Okay. Is that cool? Does that make sense? So we got our level mark right there on SPY. Let's go into a daily. I'll show you what it looks like. There is where the gap comes in. All right. See that gap right there? So I can start adjusting it just a little bit. That gap right there. So what you'll see happen is if we push a little bit higher overnight or into 680, maybe it wants to tap it or something like that, 680, because it's a big psych level. We could have a green candle that may goes a little bit higher, and then 680, 679 hits in this zone, and we have a red day and then pulls back like that, and then everyone's like, oh my gosh, we're crashing, we're going back. No, it's just a pullback. So if you can trade the downside, it could be, we don't know when it's going to happen, right? But it could be Monday or Tuesday, people taking their profits before the big FOMC meeting on Wednesday, right? So knowing the technicals and knowing when the data stuff happens, you can kind of understand when that pullback would happen. It can happen tomorrow. It can happen Tuesday. But as long as we're above 673, that pullback can happen. As we hold that, then it rips back to higher like that, because rate cuts are bullish. That makes sense? So pullback, red day scares everybody before the rate cut decision day. And then he says rate cuts. And if we hold 673 on the rate cut decision, then we can go higher. That is bullish case number one. But we always got to have our head on a swivel, as I like to say, that, Brian, what if that fails? What if Trump comes in and says something and just throws everything off? Okay, I will look on the charts, right? So this is the case scenario that will most likely kind of play out, is a little bit higher into that 679, 680 level on SPY. If we break above 680 again, more push higher into that channel, right? And that takes us roughly up into 683. There's so many numbers, just keep push higher. So we good there on the fives in the chats, Does that visual make sense to everybody? It's if you see red, and which is why we say maybe sit it out if you're not comfortable trading the downside with puts and you're not comfortable with what gap fills look like, just watch and wait for SPY coming back to 673, 672 area. Okay. All right. I'm going to go into the go into the hourly and show you what that looks like on the hourly. So now that we have this big level marked, look how it looks on the hourly time frame. All right. You see some profit taking kind of already happened at the end of the day on Friday. All right. So what we could see, do you see it kind of curling and bullish? And if we take out the dark black area, for those that aren't familiar, is when the market is open for the New York session. So when we actually trade options or when your brokerage opens, so on and so forth. Okay. The light gray area is after hours. What's happening when the market for the New York session is closed. The futures market is open right now. So we can have this after hours overnight into Monday, and then Monday comes. And if we get that push like that, of course, it's going to be bullish. But that's when traps are set, because we know there's a gap below. Tuesday comes, or either Monday, one of the days, Tuesday, Monday, and then we have that drastic potentially pullback into the FOMC meeting, okay, on Wednesday. So we could chop around tomorrow, grind a little bit higher. Everyone's like, we're bullish. Okay, keep buying. But this is the area that you ideally want to buy the dip on to go higher if you're trading. Okay. If you're bullish calls, I would be very cautious with it continuing to grind higher. Right. I'm just saying, if you want to wait, if you're not comfortable trading puts or you're not comfortable trading big red days, wait for that big red day to come sometime this week. Watch 673, 672. If it holds, then that's where your entry would likely want to be. Break, retest, and then higher if we hold. Okay. Well, Brian, you said you said that you were going to play a devil's advocate. Well, Brian, what if it gets very drastic, right? We can have failures of all-time highs. It's called a look above and fail. So you've got to be prepared for that too, because I don't want you to come back blaming me. Brian, I entered calls at 673 for SPY calls and I tried it and it didn't work, right? We can have what we call look above and failures. That means we break above a new all-time high, come back, drastic pullback, fail it, and then we're right back in the bottom end of that channel. And this is where that volatility of a Trump market or news kind of comes in, or earnings, is the ranges are so wide. Look at this. See how it grinds in the top of the channel, elevator down, then back up, top of the channel, break all-time highs, back down to the bottom of the channel. Man, we're failing. Nope, back to the top of the channel. Right? So this is where either new beginners or people that are not in communities or people that are like, what is going on with this market? That's why we work top-down analysis, monthly, weekly, hourly. Monthly, weekly, hourly. So you have a better understanding of what's going to happen day in, day out, and then you can zoom out and be like, oh, okay, we're still good. We're still good. There's no concern just yet, but it's confusing day in and day out when you see we're red, we're green, we're red, we're green. Trump said this, did that. Zoom out. It's very, very volatile. Fives in the chat, we good? Some of y'all aren't participating. We good? Does that make sense? All right, cool. I'll start speeding up because SPY is our big analysis there. Qs will look the same. I'll give you levels on the Qs. We won't have to go and do a whole analysis on the Qs, but 673, line in the sand. If we fail underneath 670, that's where a little concern will come in, and we come back to this 663, back to 650. Otherwise, above 670, or excuse me, 673, bullish on the market, bullish on SPY. All right, let's go to Qs. Got a previous all-time high here sitting. We'll mark that level right there at 616. Excuse me, let me zoom out here. 614 pullback. Right? 614. Maybe it dips down into 613, but 614. Right? 614. Let's jump on the daily. Look at this big gap fill here. It could dip under. Right? So it could fill partial the gap. And this is where that potentially October failure could come all the way back down potentially. Right? So we're bullish up into here. This gap will get filled. It will get filled. We just don't know if it's going to hold and go back higher or if it's going to fail. That gap will get filled this week. Right? So my community knows inside of leverage that gaps are beautiful. We just don't know where the high is and where it's going to close. So gap fill is full 612. Full gap fill 612. That means you will see a drop from 620 back to 612 most likely this week. That's a big move for people that are looking at the market day in and day out, right? So this is how it would look. Again, 620 could come in, right? Be careful up into that big psych level of 620. If it breaks 620, don't try to short it. Don't do anything. But if we start seeing some downside, your level will be 612 to 613 on the Qs. That is where you want to get interested again for those bulls to hold. This is where big money is looking to hold the market to go higher, right? They want that. You want to see what it looks like really quick so you understand? NVIDIA, perfect example of a look above, fail all-time high, right? Look at NVIDIA. Here is exactly what the market looks like right now, which is why you do not want to chase new highs. The move's already been made last week into the end of the week with Tesla earnings and IBM and semiconductors regaining strength. Okay. Here's exactly what the market looks like. Broke new all-time highs on NVIDIA. Everyone's horned up. Everyone's like, new all-time highs, NVIDIA, 200 plus, going. Nope. Right back down. Could not hold that all-time high. It tried. See what it looked like right there? Bears the bounce. Failure back under. Now it's reclaiming. That's exactly what the market will do most likely this week, is trap people only to pick it up lower and then drive it higher if the bulls step back in and earnings are good. Does that help everybody right there on the video to show you what the overall market looks like? Break of a new all-time high, there will be a pullback to that previous all-time high. They're going to try to hold it, right? If they hold it, then you're going to retest the high. If they can't hold it, you'll fail under lower and trap more because they want it lower and then drive it higher again, right? That is what the market will look like. Look at that. Does that not look very similar to how NVIDIA looked when it broke new all-time highs? Okay. So if you're a bull, you want to watch that zone to make sure that they hold the all-time high, right? That is why patience this week is so key. Now, I love these weeks because whenever I see a gap, you already know. You already know. I told folks last week I missed the gap, and that's why I don't know why I didn't trust my analysis. I missed the gap fill on, I think, Tuesday or Wednesday. Obviously, the market went higher, but I know when there's gaps, there will be something that triggers that gap to come and get filled. I just can't predict where the high is, and I don't try to. I just know that that gap will get filled this week. So I know that there's a put opportunity out there if I'm patient and if I follow my rules and I don't jump in too early because I don't know where the top is. I don't know where the top is yet, but most likely that gap will get filled, whether it's earnings, FOMC, who knows? But I just know that that is the level that big money wants to buy. Cool. We good? IWM. We're at the top of the hour. We have been on here for an hour. I told everyone roughly an hour 15. So we got about 15 more minutes. That I want to make these short and sweet. So 15 more minutes. Get your stocks in that you want me to cover. I will cover the Mag 7 and we'll be out of here. Okay. So I do like the indices this week a lot to maybe potentially trade. I do like the indices to look at. So that means SPY, QQQ, which I don't typically trade that often, to be honest with you. But SPY, QQQ could be pretty nice to trade because of those gaps and those opportunities and the volatility back and forth. All right. IWM, let's go work from top down. Obviously, we're bullish. Look at the previous all-time high, holding 246. As long as we're above 246, that is your bullish pivot right there. New all-time highs, pull back, held, 246, can go higher. So any pullback, as long as it's holding 246, is going to be bullish, okay? Daily, let's look at where the gap is on the daily. You can see right there, it's in this channel. So there's a small little gap here, but IWM is bullish with rate cuts, okay? IWM is bullish with rate cuts. Last time we had rate cuts, which was back in what, right here, bullish rate cuts, bullish rate cuts. Okay. So IWM is a top watch if that rate cut comes in 0.25 or whatever. So IWM could do something like this, potentially pull back in that 240, 242 snapback and then rip back to highs, as rate cuts are typically good for small caps, small cap companies that need those benefits of those lower rates to run their company. Okay. The only concern, IWM back below really 238, right? It could dip down under here, reclaim, trap, and go higher, right? So I need a big failure underneath 238 to really get concerned. That would be underneath this Trump tariff pivot. So I'd mark that as kind of my yellow caution area right there. Any pullback, IWM, bullish above that pivot. And you want to look for a take of 250 plus, and maybe it goes to 255, 260. And you'll see IWM most likely, as long as it holds that, to go higher. Okay. So IWM doesn't have as big of a gap, but it could pull back potentially $3, $4, $5. But yeah, does have a clear level here. Does have a clear kind of double top pivot there that you know where your stop loss is above that 252 or above 250, is you do have a nice clear stop loss is if it triggers up into here, pull back to there. That could be a decent trade, right? Could be a decent trade right there, back down. Now, failure back underneath 258, mark that. That would trigger the downside, but that is your pivot right there. For now, you see it's kind of forming a bullish flag to retest the high to go lower potentially. Okay. All right. 248 right there. So it's kind of in that channel, above that channel. It needs to fail back into that channel to go. Alrighty. Let's go into Ionic calls. Yeah. Let's look into it. Ionic calls. Look up and crap. I love it. I'll briefly cover the SMH. We don't usually cover it, but SMH is the semiconductor ETF. So for those of you that like semiconductors, that means what's going on with NVIDIA, what's going on with AVGO, what's going on with AMD. It's extremely bullish. More AMD calls, or do we get a pullback? Right? Watch the SMH, which is the semiconductor sector. Right? And as long as this is bullish and it's holding highs, then you can trade your semiconductors up. If it fails back below 349, that's a failure, right? A look above and crap, or look above and fail, back, pull back, like that. All right. Other than that, it's still bullish. It can go higher. So right now, semiconductors are extremely bullish until otherwise. Okay. So watch your SMH as that semiconductor deciding which way to trade semis. Okay. So that is a good way. If you don't know which way NVIDIA is going or which way to trade NVIDIA, man, NVIDIA is bullish. It could, but if SMH is weak, then you could get that random pullback on NVIDIA that you're like, what in the world happened to NVIDIA? Look at the SMH, look at the semiconductor sector. Why is it weak? Okay. Or why is it strong? So as long as this is strong, holding above that 350, then your NVIDIAs, your AMDs will keep going. All right. So there's my semiconductor folks. So semis could be on high watch this week because they don't have any earnings, right? So I don't like to trade tech, any big tech during their earnings week. So that means Google's off limits for me. That means Apple's off limits for me. That means Amazon's off limits for me, meaning trading it intra-week. I'm not trading any of those this week. Google, Apple, Amazon, Microsoft, Meta, none of these top that everyone trades, off limits until they report. I'm not trading them. Off limits until they report. Brian, why? It's bullish. Because the premium is going to be too high. Whole nother discussion. Option premium is going to be elevated. That means when you trade it this week, the options contracts are going to be extremely elevated. That means when they report and you're like, man, it's great, they're going to be cut and slashed in half or more. Okay, that's called IV crush or implied volatility crush. Okay, so again, if you're new to this in options, that's why I think it's important to be in some kind of group or be on these lives and understand that, so you don't trade your favorite stock and you don't know why it's doing what it's doing. All right, cool. Amazon, I do like, but again, Amazon, I do like this bullish flag holding, trying to retest the highs. Amazon reports well. Amazon's been kind of lagging. It's one of those grind downs, right? Grind down into a support zone. If they have good earnings or your position in shares, you got long calls. Amazon, I got 250 plus either end of the year or obviously long term, 300 plus. Most people are considering, yes, I do think 300 plus. It would look something like this. It looks very similar to how AMD looked. It looks very similar to how AMD looked. They got to perform, Amazon be doing some messed up stuff sometimes, but with Bezos. So look at this. Does this not look how Amazon looked? AMD. All right. So I can't predict the future at all. I'm just saying that you still ordering from Amazon. Holidays are coming up. All right. Amazon, this big bullish pivot right here on a weekly. Yes, it could fake some folks out and drop lower. We don't know. Right. Just like Netflix did. All right. Just like Netflix did. You don't know until you know. This Netflix could have gone like this. Look at that big bullish pivot. Everyone was like, man, bull flag on Netflix. All right. This is why you wait till after earnings, or you grab your shares, or you grab longer dated calls, unless you got some insider information. But most people would probably consider Netflix to do something like this. And it flipped on them. Right. So if you're trading it or wanting to trade it in a short time frame, wait till after they report. If you got long-term shares, hold, dips, buy more, great. If you got longer dated calls, 3 months out, 4 months out, 6 months out, year out, if it drops, you're good. If it goes, you're still good. Okay. So be careful on options for short dated contracts with big tech this week. Okay. You don't know what's going to happen. All right. I like Amazon. I like it. It looks great. Into their earnings this week. Google, going to be very interesting on Google. It is very, very bullish. I think their earnings are going to absolutely smash personally. So it could they do a last smash of earnings and then finally pull back. Who knows? But Google just absolutely been killing their earnings, right? Absolutely killing their earnings. They were a lagger this year. I put everyone's radar on Google at 150, 160. It was lagging when every other tech company was running, and Google just absolutely took off. So if you can be blessed, or we can be blessed that Google can give us another pullback into this retest of 200 somehow, that'd be absolutely wonderful. Somehow fake everybody out, pull all the way back. That'd be great. So I don't need to cover any of these really. Microsoft, Meta, we'll just wait till after they report. Meta, always a big mover on earnings. It's already curling up. Meta makes massive moves on earnings. It could be a lotto potential, who knows? But Meta, 800, 900, 1,000 plus, in my opinion. Meta, I think personally, whenever it does it, it will look like that. And I kind of want to document it here just to go back on it. But if this is the bottom, then it could just take out new all-time highs, 800, 900 plus. Earnings is great, but it's already starting to curl just a little bit leading up into earnings, just kind of sitting here perched. Meta makes $80 to $100 moves on earnings. $80 to $100 moves on earnings, whichever way it decides to go. We don't know. We'll see. All right. Coinbase, same thing. Earnings at the end of the weeks look extremely bullish right now. Coinbase, typically November is a very bullish month for crypto. So everyone's picking up that crypto dip right now. Coinbase, Hood, Mara, Riot, your favorite meme coins, Solana, Ethereum. Typically November is a very bullish month for crypto. So keep an eye on crypto. We'll take a look at it intra-week. Like I said, semis, we're wrapping up here in about 3 to 20 minutes. 3 to 5 minutes or so. So I'll get to Ionic. I know someone had a question about Ionic, so I'll go ahead and cover that. Ionic calls, beautiful chart here right now. The only concern on Ionic is they need to start generating some revenue in the long term. But what I do love about Ionic, we caught Ionic back here at $6 to $7. Okay, so if you know, you know. But Ionic is in the quantum computing sector. Okay, so quantum computing stocks such as obviously Google's in quantum computing, some of our big like Intel and things like that. But Ionic is in Silver Spring, Maryland. It's partnered with Google. So it's a little bit different than some of these other quantum computings that everyone's like, man, this is going to crash. I think Ionic's a little bit more stabilized because it does have those partnerships. So Google, Microsoft, so on and so forth. But Ionic, beautiful chart here, in my opinion, for $100 plus in the short term. So that could be on earnings, that could be into the end of the year, that could be into 2026. $100 plus, in my opinion, at least retesting these highs of 85. So you got 60 to 85 on Ionic simply because of the chart structure. Look at that beautiful break and retest on Ionic. Break above, retest, holding, and then trying to retest the high back to 90. So you got another $30 move back to the highs. Ionic holds this nice $60 level. Okay. So yeah, long calls on Ionic. I like right now. Your target in the short term will be back to 75 and then back to about 82. Okay. So it would look something like this. Hold back to there, and then break if it goes higher like that. Okay. So as long as it holds this $50 to $60 level, I like it around that area. Okay. So you could trade it essentially from here to just there, and it would be a nice trade. About a $15 move back to the upside. Okay. So I like it holding there more so on a weekly chart. I like how that weekly looks holding there. Let's see how this week opens. Beautiful retest right on that level. Cool. All right. There's your Ionic. Netflix puts options contract burned me. Yeah, exactly. Those options contracts just started losing value. Premiums just were acting funny. I've tried Netflix. I've had good trades, but ultimately the spreads, and I just leave Netflix alone. Now, I do think Netflix, depending on where it is, there is a Netflix bullish. I would look at this for shares. I would definitely consider Netflix. If you're like, man, Netflix is just too expensive. Everyone keeps saying buy Netflix. I like this NFXL. NFXL could be an easy double up for a bullish directional share here. Okay. So this is a 2 times bullish leveraged ETF. Okay. This is great for share buying when a big company that you know and love and value and it's not going anywhere, such as, Netflix, Google, AMD, NVIDIA, they all have leveraged ETFs. Great for share buying. A lot more potentially affordable for those that may be like, man, I can grab potentially 50 shares of this. I may not be able to grab a full 50 to 100 shares of Netflix, but I can grab maybe 25, 50, 100 shares of this, right? Beautiful. I like it. I like the retest here, starting to grab shares around 40 and then picking up the dip around 36. So it's coming into an awesome buy zone right here. Share buying. If you want to have shares on Netflix, right there. No brainer, in my opinion. Long-term Netflix, where do you think Netflix is going? Right? It'll probably have a stock split again. So this NFXL, 100 plus. Thank you for pointing that out because I completely forgot. Netflix, NFXL, 35 to $45 in that zone. Starting getting your average cost, not financial advice. Back to 75, 2026. All right. I got to get out of here, folks. I got to get out of here. NVIDIA. We'll talk about it in Leverage University. If you still haven't joined NVIDIA, as long as it's above 184, 185, bullish, could retest back to 190. That is your target in the short term, 190. Be careful on 190. That could be a pullback, but 190 from 185 to 190, that could be your nice push into the start of the week. It is holding, break above 187, calls on NVIDIA, nothing but room to 190. That's probably one of the top watches in the start of the week, 190 on NVIDIA. Targeting that. Okay. It looks something like that. Could be a nice Monday, Tuesday trade. No interruptions on NVIDIA, no earnings, no nothing, no semiconductor earnings that are in the way. So NVIDIA could be a top watch. Calls as long as it's above 185. It pushed into the end of the day. Bullish 190 is your target. I'll go ahead and call that out this week. AMD, I got no trade on this personally. Just bullish until it's got to pull back. But I've been leaving AMD alone until it gives me, based on my trading style, I just have no entry other than this was a beautiful trade on Friday, break of new all-time highs. That was great. I just can't chase this. I don't know where my stop is. It just keeps going higher. Yeah, calls off open. That's great until you get slammed back down, right? So I've got no trade on AMD personally, at least for my trading style. If you do, great. But as long as it's above that pivot level, that yellow line, 243, you're bullish, right? But NVIDIA is a nice trade into 190 if you can catch that. Some quick calls on Monday if it's not already there. All right. AVGO, yeah, still a little bit stuck here. Still a little bit stuck. Still got to get above that 360. As you can see, big pivot there. AVGO, great earnings right there from the last earnings. We'll see what happens. Don't really have a trade there. TSM, as long as it's holding 294. We've got some interesting, long as it's holding above that daily 20, interesting. One that I would put on your radar for the semiconductors is SMCI. Okay, I know that it's coming into its earnings. It had a little bit of bad news, but as we know, they like to slam it back down into a potential pivot point, which could be earnings. So SMCI, from a technical standpoint, oversold on a 4-hour. 45 would kind of be my area of interest on SMCI. So watch SMCI into this 45 level. If it holds 45, great. Earnings could send it back to 50 plus, or it could send it further down. So we really want it to hold this pivot level here of 45 and then maybe reclaim back above 48 and ultimately $50 level. But SMCI coming into an interesting level here. Every time it pulled back, rotated, pull back, rotate potentially. But yeah, SMCI, I would keep on high alert for the semis. IBM, just absolutely stupid. I just completely missed it. I just completely missed this big dip opportunity right into 260. It ran. If you've never traded IBM, contracts are super cheap. I mean, look at this, 3,000% on options contracts. 3,000%. That means right there, $1,000. You could have put 10 to 20 bucks in and you make $1,000. $10 to $20 goes to $1,000 per contract. So I just, that's going to happen again this week, probably with Meta, Microsoft, who knows. Just if there is a big gap down or gap up, that is why we wait till after earnings. Because IBM was bullish, but it dropped on earnings, gave another buy opportunity, and then there you go. So IBM and semis, heavy watch this week, in my opinion. That is on a top watch. Is going to be all semiconductors. Big tech, leaving alone. Tesla, I have nothing to say. I don't have anything to say. It is a wild bull. It popped on earnings on a miss, recovered. It's just trading in a channel. I don't like it. I don't like it personally, trading. PayPal, we'll have to wait till earnings. Remember, PayPal, interesting. This is one that will be interesting. It's got some heavy top wicks, but it's also consolidating into this bullish flag. Does PayPal finally take off on earnings, break above that $80 level and start heading to 90? If we get that, it is load up zone for PayPal, because that is a break of a pivot point at $80. Breaks above 80. I mean, you start potentially seeing something like that on PayPal. All right. $80 will be that pivot right there. Okay. You see PayPal above 80, you start getting real interested. Okay. PayPal above 80, you start getting real interested. This is why this share opportunity could be an inverse head and shoulders from a technical right there, right there, right there, there. All right. Hood, top watch. We'll see intraday. And yeah. Any other questions, thoughts, perspectives? I mean, I can go down a whole watch list, but I'm not going to. Any other perspectives from anybody? No? We good? Futures. Made some nice money on gold today. This morning on futures. Futures coming back into an interesting area. We'll see. MNQ. There is how the futures market looks now. You see this big gap right there. It gapped up. So tomorrow we will probably have, or after hours or overnight, you'll probably have some red in the morning on futures, as it might push a little bit higher for Monday morning. And then we got this big gap right there that was created on that Trump news. Buy the rumor, then sell the news. Okay. Alrighty. Well, thank y'all so much. Right on time, about an hour and 15. I don't apologize for keeping you too long. That's why I won't make these extensives. And I try to get them out as best as possible. So Netflix puts, no other questions. Not a lot of people are interacting today. That's okay. That's okay. Well, we covered ionic calls. Semis running again after hours. Yeah, XOL upside. So if semis are already into, David, if semis are already into that resistance, like if NVIDIA's already into 190, right, might look at a potential put opportunity, or just wait till it hits its resistance, because it's already there. It's already happening, right? But semis bullish right now. Thank y'all so much. Peace, love, and blessings to you. Enjoy the rest of your week. I will see y'all in Leverage University for our live trading session, and we'll go from there. All right. If you are interested in Leverage University. I do answer my DMs. Message me. I'll see you all on the other side. Peace, love, and blessings. Have a great week. Be blessed. Bye.